Hello Professor Stellenwerf, and fellow students. My name is Mitch. Today I am going to talk to you about my adventure with estate taxes. Woohoo! Let me first tell you what estate taxes are. Estate tax, also known as the death tax, is a tax on your ability to transfer your property, or your estate, after you die. When you die, if the total value of your estate, like the one behind me, exceeds the threshold amount, you must pay estate taxes on any amount over the threshold. The threshold in 2011 was $5 million, and the tax rate was 35% on any amount over that $5 million threshold. Not very fun now, is it? I don't think so either. Some states even have their own estate taxes, like good old New Jersey. So if you live in a state like New Jersey, and your estate is beyond the threshold, you have to pay estate taxes at both the federal and state level. It just gets more fun, doesn't it? Now that you're angry about taxes, let me tell you my story. It all began last year when I found out my father was ill. It was only a matter of weeks before he passed away, leaving me with his entire estate, which was valued at $10 million. You see, my dad knew about estate taxes. So he kept his estate small in order to save me the burden of having an even larger tax liability than I do. I live in Texas, which does not collect an estate tax. I knew that I would have to pay a federal estate tax of $1.75 million. I simply do not have that kind of money. Mostly because I spent it all on bingo last week. Plus, it's not like I could get it from the estate, as most of the estate consists of assets that my father used to run his knitting company. So what, my father liked to knit. Big deal. Anyway, I took a different approach. I used my father's time travel machine and went back to 2010, when there were no estate taxes. This is his time machine, by the way. It was a bumpy ride, but it meant I could inherit my father's entire $10 million estate and not have to pay the government one penny. After all, I couldn't wait for other states to be like Ohio, who will eliminate their estate tax on January 1, 2013. So I went in this machine and boom, problem solved. Just one problem. I forgot to hit the number 1 in 2010 and accidentally hit a 0 instead. So then I was stuck back in 2000, instead of 2010. Big problem. Why, you ask? Because the threshold was only $675,000 in the year 2000, and the estate tax rate was 55%. This meant I would have to pay over $5 million in estate taxes. I was doomed. I was so sad I could cry. Okay, I admit it. I did cry a little. I didn't know what to do. Estate taxes are worse than going to McDonald's to get a Happy Meal and getting fruit instead of French fries. Just when I thought all hope was lost, my friend Catherine woke me up. She told me I had been sleeping and the entire thing was a dream. She also informed me of some new modifications to estate taxes introduced by two incredibly awesome gentlemen named Logan and Matt. Basically, for every year I own and operate the estate, my threshold goes up. If I own and operate it for 20 years, I won't owe any tax at all. This was great news. Plus, it makes sense since only 1% of the federal government's total revenue comes from estate taxes. By eliminating estate taxes and encouraging companies and individuals to invest and grow, the government will ultimately collect more revenue in other forms of taxes, like property taxes and sales taxes. I am so happy. I'm glad super great people like Matt and Logan introduced those changes to estate taxes. Now, companies can invest in themselves and grow.
I'm glad, too. I think it's awesome.
I think you're awesome. Anyway, now entrepreneurs will be more encouraged to start companies and put more people to work. It is just spectacular. Well, that is my story. I hope you enjoyed it. If you remember nothing else from this amazing, out of this world, life-changing presentation at least. Remember this. You cannot always avoid taxes. As Professor says, do what you plan to do, and then, tweak it for tax advantages. Have a great day.